People floated on deals a few years ago, and then rates went up a lot. And that's why they got burned, so to speak, on floating rates. And now they're saying, oh, I'll never float again. But the thing is rates went from low to high, and now they're high. And so this is the time to float when they're high to go and then float them down. And then, like you said, when rates are low, that's the time to fix. And that way, when rates rise, you're not getting hurt by that. Obviously, it's a lot easier said than done, but it's very unrealistic that rates went from low to high, you got burned, and now if you float again, rates are going to go from high to higher, and you're going to get burned again, right? It's That's very, very unlikely, if not impossible. And historically speaking, well, so also the reason why people got burned on those floating rate scenarios of a few years ago isn't just because rates went up, because everyone knew rates were going to go up at some point. Everyone knew that rates were really low and that they had to go up at some point. The thing is they went up a lot faster and a lot more than anyone really expected. And that's the thing. When things happen that go against market consensus, that go against expectation, that's when things get dicey. And the funny thing about that is, if you look at the cycles, the market historically actually under expects how much rates are going to move. So when the rates are low, the market misses as far as how much rates go up and how quickly. So maybe people should have known, hey, the market's projecting X, but usually it goes up faster than that. So we should actually look at that. But the same is true on the way down. The market actually under expects how much rates fall in a falling rate environment. And so we are in a falling rate environment. Obviously, the Fed has already kicked off the cutting cycle in September with a 50 basis point cut. The economic data like GDP, like inflation, all that is coming in down and down and down. So that's in line with a easing cycle, and the market under expects. Right now, the market's saying, yeah, the Fed's going to cut, and SOFR will probably bottom out at around 3.7% or something like that. But I just don't. But again, the market's probably going to be wrong, and the Fed will probably cut more than that, and that's going to just be non-consensus.